2023 was kind of the year of sweeping regulations. We're kind of on the tail end of that. And it seems like most of the markets that were really highly regulated kind of came out in 2023 and said, we're going to put some real strict regulations. And you operate in a market in Austin, but also in Savannah.
Hi, I'm Wyatt.
And I'm Grace.
And you're listening to our dad and your host of the Vacation Rental Revolution podcast.
What's up, guys? Welcome to another episode of the Vacation Rental Revolution podcast. I'm your host, Sean Moore, and we're coming with our Friday interviews, my favorite types of episodes that we get to chat with other short-term rental investors willing to share their experiences, their knowledge on walking into this game, in the short-term rental game, and hopefully sharing some of those, ups and downs along the way so that those of you listening can walk into this game with your eyes wide open. Today, we're joined by Miss Beth Perkins. Beth, thanks so much for joining us.
Absolutely. Thanks for having me.
Absolutely. Really excited. And this is going to be a fun conversation because we can navigate a lot of different topics because not only are you a short-term rental investor, you've got your own property. We'll talk a little bit about that journey as well. But also you are an agent, a realtor in the Austin market who has helped a lot of our Beths family buy properties that want to have that Texas experience, either Austin or the Hill Country or whatever else. And so you also see it from the professional side of the lane, if you will, right outside of the investor side of it. So we're gonna have a lot to talk about. What I like to start with always is just a little background. Tell us, what the backstory is of Beth and what got you involved in real estate and short-term rentals, and then we'll kind of take the conversation from there.
Okay, yeah, absolutely. So I'm from Texas originally, like an hour north of here from a small town called Belton. And then I came to Austin in 1997 to go to graduate school at UT. I have my MBA from UT and then have been here ever since. So I've been here since 97, which is basically an Austinite at this point, right? Like all the growth has been in recent years. So I've been here and seen a lot of changes, some good, some bad, but lots of changes since 97. So went to graduate school, and then after graduate school I have my background in accounting, so did some accounting. And then I started actually in the apparel company where I designed and manufactured maternity apparel. And then when the kids were little, I have 3 kids that are currently 16, just turned 19 and 21. So when they were little and I was at home, I decided that I would do something else, and I moved into real estate. So that was about 12 years ago. So I've been in this real estate market for about 12 and a half years. And then I don't even know, you just said this, and I was thinking about it, how I got into the short-term rental space. I've historically worked with a lot of investors. That's something I've always done, but not necessarily short-term investors. So I had a lot of investors that would do fix and flips and long-term rentals. So I was always in that space. But then the short-term rental came on my radar. I don't even know. I honestly think it might have been like a social media algorithm thing. I don't even know how it came on my radar. But then I got interested in that. And I'm the kind of person, when I get interested, I'm all in, right? So I was wanting to learn everything and watch all the training and all the webinars and do everything. So I kind of moved into that space and then found out about Beths and joined Beths as a member initially because I was interested in buying and operating short-term rentals. And then that turned into this relationship where I am helping a lot of the Beths members interested in this market find some vacation rentals. And we've had some wildly successful purchases in this market. So it's kind of holistic and all over. I'm kind of involved in a lot of different aspects.
So as you navigated into, like, as it started for you, kind of just saying, hey, listen, we want to buy our own property. And so take us through that journey a little bit. Where'd you buy? How'd you decide your market? Like, let's go through that. And then we're going to reel it back into the professional side. I've got some questions on that.
So I would like to think like that it was very well thought out, but it was not. My oldest goes to school in Savannah to SCAD. And so it was just natural for me. He was a freshman and I thought, well, I want to buy something there. So we'll have something to stay in when we visit. And then when he's ready to move off campus, he'll have a place and then I can turn it back into a short-term rental. So that was the plan. So I did end up purchasing in Savannah, which has really interesting regulations. Like everywhere is different, right? So I know Savannah regulations as well as I know Austin at this point. But I ended up buying something there. And then after his freshman year, he decided he wanted to move out of the dorm. So he actually currently lives in it. So I don't even have a great short-term rental story to tell you about that property, although he will be graduating next year. So then we'll move back into that space and turn it back into its original intent.
But that was the plan all along, right? Like you did that, you bought it for that reason, so that when he moved out of the dorms, he had somewhere. So it's awesome. So
Sure.
it's working
it's
as
still
planned.
great. And
Yeah.
that's a great market with really, really good appreciation.
Yeah.
So it's going to end up being a great, and I still had like my bonus depreciation and everything. I still like it played out the
Yeah.
way it was supposed to, except that it didn't turn into a short-term rental off the bat. We did it in reverse.
Yeah. Yep. And that's okay. It's funny when I always, what, and you know this from being in our world and part of our Vodacy family is that's why I always tell people it's really important to really understand your property goals, right? And it helps you select those markets, how we're going to navigate those markets, what we're going to actually do with the properties, and everybody's property goals are a little different.
Mm-hmm.
And so this is one of those, like you said, it's kind of in reverse. We're going to use it while your son's going to college there, and then we're going to flip it to a short-term rental, really
That's right.
popular market. Being like you mentioned, there's some regulations you're going to have to navigate, and so when it comes to that, let's talk a little bit about those. And I don't want to dive so deep into the weeds on the regulations in every
Right.
individual market, but I think it's good to have a little bit of a conversation because that's kind of on the top of the minds for a lot of people right now.
Right.
We've heard 2023 was kind of the year of sweeping regulations. We're kind of on the tail end of that, and it seems like most of the markets that were really highly regulated kind of came out in 2023 and said we're going to put some real strict regulations. And you operate in a market in Austin, but also in Savannah. There's some roads
Mm-hmm.
you've got to navigate a little bit if you're going to turn it into a short-term rental. So are you going to be able to do what you wanted to with it?
Well, Savannah is interesting because they have a wait list. You can't get a short-term rental permit, so it attaches to the property. So you have to
Okay.
find a property that has it within that specific zoning downtown. And my property is actually outside of it, so it kind of isn't under that umbrella. So it's kind of a shade of gray. So we'll see what happens with
Yeah.
that. But you're right. Austin's super, super interesting. And I feel like we've moved in the opposite direction where a lot of places have put more regulations in place. And
Mhm.
you may know this or maybe not know this about the Austin market where we have the three types of permits, right? So we used to not be able to legally do, I'm not saying people didn't do, but you could do owner occupied single family homes were eligible within Austin city limits for a
Mhm.
permit, but non-owner occupied were not. That was historically the case. So a lot of the Vodacy clients that came to me would look in markets around Austin with different regulations or no regulations in the hill country. And we can talk about some of those areas, but people kind of avoided Austin because of that, because they
Yeah.
weren't owner occupied properties. But then last year in 2023, there was a case where someone said, it's my property. I can do what I want with my property. And the courts agreed. So now if you were eligible for the owner occupied single family, you're also eligible for the non-owner occupied single family. So I feel like we've moved in the opposite direction where there's a little bit more leniency. And I've told my buyers right now, when there were regulations in place, I'm not saying there's not short-term rentals in Austin, because there are, but there were some regulations that kept some limitations where it wasn't
Yeah.
as saturated as some other markets, right? And now you can get that permit. You can move in here and get this permit for non-owner occupied when there's not as much saturation. They haven't come in and said, we're going to put caps, we're going to put limitations, we're going to change the regulations back. It's kind of a sweet spot right now to kind of make your move. Well, and also our prices, to get into that, are suppressed right now, and there's not a lot of competition with the interest rates and whatever the case. So it's kind of an opportunity right now in Austin to come in and get some of those single family homes that can perform.
Yeah, it's interesting when you mentioned that the regulation got challenged. We're seeing that in a lot of different areas across the country now, is that the regulations are getting challenged, and especially when you go into and it goes into the state courts and they start to say, okay, yeah, we're not going to allow that, especially if you're in like some of these red states. Austin's
Mhm.
a fairly blue city in a red state,
Right.
and when some of those blue city regulations get challenged and the state comes in and says, no, you can't do that anymore.
Mhm.
It can open up the doors a little bit. Salt Lake City is a very similar rules and regulations that Austin had, and where it says that you can't short-term rent inside of the city limits of Salt
Mhm.
Lake unless it's owner occupied, right? And so there's no and there's plenty of short-term rentals on Airbnb. They're not operating with the right permits. My guess is that's going to get challenged here as well, similar, because now when you have cities like Austin and there's other cities that are setting precedents, they're going to say, yeah,
Mhm.
we're challenging or we feel like they're treading on property ownership rights a little bit too much, right? So
Exactly.
it's very interesting. I said this all last year: as the pendulum swings one way on regulations, usually it comes back somewhere toward the middle, and you guys are seeing that a little bit in Austin, which opens up a little bit of an opportunity because not everybody's aware. And this is another point
Mhm.
that I'd like to talk about is we're so big on working with the local experts, the management company, the realtor partners, understanding these things change on a regular basis. So staying in tune with the local municipalities that are the zoning and the commissions and the permitting and licensing commissions there, so that you know what you can and can't do. And the other thing is, you
Right.
hear somebody that says you can't have a short-term rental in Austin. Well, most people don't realize that the actual city limit proper of Austin or Salt Lake is a lot smaller than they actually think it is, right? And
Right.
yeah, a lot of people are like, well, I'm in Austin or I'm in Salt Lake. We have that here in Salt Lake a lot. And you're not even in the city limits of Salt Lake anymore, right?
Sure.
And so understanding where those rules apply is very, very important to understand.
Yeah, and to your point, we have a lot of surrounding areas. So I say this, like the properties that do well here are the super sexy, like $1 million properties on South Congress downtown. And then like the outskirts, the suburbs that aren't sexy at all at a lower price point also perform really well. So we have some areas around here like Round Rock, Georgetown, Pflugerville that have no regulations. I mean, obviously you have to look at an HOA and make sure that it's allowed, but they
Mhm.
don't have regulations. So there's some opportunity there at a lower price point. And then, like we had talked about, a lot of the Odyssey clients that came were interested in the hill country, which is the area surrounding. It's exactly that, right? Hill country. There's hills, and there's so much growth there right now. So that's Driftwood, Dripping Springs, even Fredericksburg, Johnson City, that have so much like vineyards and wineries and people moving here, and there's so much growth there. So there's a lot of opportunity there, and there's different regulations. Some of those areas, no regulations. So you can move to those areas and not only cash flow, but probably take advantage of a little more appreciation because you're not in Austin where the prices have gone up. So there's a
Yeah.
lot of opportunity in the surrounding areas as well. Fredericksburg, I've sold a few things to Odyssey members in Fredericksburg, which is a little vineyard town that has tons of wineries and vineyards and so much growth. And they told me when I first started looking in that market, I was working with a property manager. I have a great property manager in that area. And he told me that, and I went and looked it up because I didn't believe it to be true. The top three wine countries visited in the world are Bordeaux, France, Sonoma, and Fredericksburg, Texas.
Yeah.
So,
Yeah, it's crazy. We actually went down there we were looking at buying either in Fredericksburg, we looked in Bernie, we looked in New Braunfels. New
yeah.
Braunfels had some really strict regulations at the time. Ended up making a couple offers. This was a couple years back, and really liked that. And it was one of those things I was unaware of how big
Mhm.
the vineyard wine country is there in Fredericksburg area. I mean, it's like I was completely blown away by how
Right.
popular it was.
I will go like for an inspection on a Tuesday afternoon at 2, and the entire downtown is packed. I've never
Yeah.
gone into that town when it's not
Yeah.
packed. And that's
Yeah.
not just summer, that's year round. So it's just one of those tourist towns, and there's still so much growth. And Fredericksburg's similar into Savannah in that those local
Yeah.
downtown close to Main Street zones, you have to buy a property with a permit
Yeah.
attached to the property already. So it's the same thing. But then there's areas outside of Fredericksburg that are like ETJ or outside of the city that don't have those regulations. So there's still a lot of opportunity there. And a lot of people are interested in that area as well.
Yeah. And it's while we're talking about some of the nuances of the regulations, which I do think this is a really pertinent conversation for a lot of people listening, is there's not like I'm telling you, you have to really dive in with these local experts who understand the markets and what's
Mm-hmm.
going on with the rules and the regulations, because sometimes like what Beth is talking about and that's similar in Savannah and similar in Fredericksburg is if a property has a permit, that permit transfers with the property. So that property is now more valuable than maybe a
Right.
next door neighbor's property who is very similar as far as a single family home comp, but it can't operate as a short-term rental. So you're going to probably pay a premium for that one
That's
with
right.
it, right? There
Yep.
are other markets that are just like they're opposite of that. When this property sells, the permit expires and it goes back to a wait list, right? And so that property permit doesn't transfer. And so a lot of times we hear somebody talk about, like if you're hearing this conversation that Beth and I are having, and you assume, well, I just need to go find a property that's already a short-term rental and I should be good. That's not true either, right? The point I'm trying to make is it's different in every single market, and
Right.
understanding how you're going to navigate that market and what you need to look for and what that permitting and licensing process is in that individual market is I mean, it's different across the board. It's not the same in states. Every city's different that you're going to go operate in. And so really diving into understanding this and not navigating this, you know, blind and just assuming, well, I heard somebody talk about this once, so now I just need to go find a property with a permit. I had that recently. I was talking to somebody not in our family and not in our Vodacy mentorship program, but somebody that was sent a question in on one of our Whiskey Wednesday podcasts. And they were saying, listen, I under contract on this property. It's already been a short-term rental. We're good to go. Because the first thing we always ask is, can you operate as a short-term rental? Yes, it's already a short-term rental. Well, come to find out, in this particular market, it doesn't transfer. And so, and the only way you can apply is after you already own the property.
Right.
You like it's a Waco type of or a Louisville. Right. You can't even go apply for the permit until you own the property. Right. And then you may or may not get it. Right. And so there's some, I mean, you're rolling the dice now all of a sudden buying a property before you can even apply.
Well, and to your point, I try to, like in my contracts in Austin, I put in the stipulation that one of the objections is that it has to be able to be used as a short-term rental for less than 30 days. And so we can get out of it up until the point of closing. But to your point, like if we've closed and then you get to the point afterwards. So I also have a contract at the city that I have conversations, and they can't necessarily say, yes, we can give you a permit, but they can give you pretty clear guidance of, yes, you should not have a problem, right? Because that's the worst case. The condo I was just sitting in, here's an example. I didn't sell it to them, but somebody bought it, $800,000 condo they bought to use as a short-term rental in downtown Austin, only to find out after they closed on it that it can't be used as a short-term rental. Furthermore, for a long-term rental, there's a 2-year wait list. So they've been sitting on it for over a year, paying whatever their mortgage is a month with zero income coming in. So they brought me on to try to sell it, because it's just, I mean, and they didn't know, right? No one told them. No one did the research. And that's easy to find on the front end. Ask the HOA, right? But now they're in this situation that they're sitting on an $800,000 property with no cash flow.
Yeah, and that's a real world example. And just like you said, it's easy to find on the front end, and usually it is easy to find on the front end, but they didn't find it, right? And that's why I tell people a lot of times when you're navigating these waters of investing is you don't know what you don't know yet. Right. Especially if you haven't made a few mistakes, if you hadn't heard some of these stories and you're like, okay, I need to make sure that I cross that T and dot that I, because, I don't want to make that same mistake. And it's not like they just didn't know where to look, how to find it. Not that it was hard. They just didn't know the information to go out and do it. And that's why.
I put that on the agent to some degree. Like that's something that should have been researched prior to closing, because they don't buy a condo every day. They don't know that that's something they necessarily need to ask. And maybe they were even told they could do that. But then it turns out, I mean, they haven't been able to do anything, zero income for however long, a year. So.
Right. And I agree with you. I think that, there's a reason why, I own a brokerage here in Utah and have been a licensed agent for years. I don't ever represent myself in any state that I go invest in because I don't know the local nuances and all that stuff. And I want to hire and work with those professionals that are really in the game. And so it's interesting how you're, like you said, you've always worked with investors, and that's kind of always been your sweet spot. And then now you're adding this asset class to kind of your repertoire of expertise, which is awesome because it's been so popular the last few years. But there's this level of responsibility, I always feel like, right? And I think that sometimes in the real estate world, sometimes that level of responsibility isn't taken that serious by agents, management partners, just whoever it is, because a lot of times the veil of entry is really thin. Maybe they don't have the experience. A lot of times people are not misleading somebody intentionally. I just don't believe they have the experience either.
And I don't think they're being malicious whatsoever. Exactly. I think it's exactly a lack of knowledge.
It's just a lack, right? That agent probably never navigated those waters themselves. And so that's why I always say it's really, really, really important to interview somebody. Make sure they're in the game you're going to play in. Make sure that they actually have operated, closed, and represented deals that are the type of deals that you're buying. And if you're an investor, it's really important that you're not just getting a single family home agent that's never done any investment type properties, because they don't know those things to really look for. Not that they're going to mislead you on purpose. They just don't know where to look.
Well, and it's also like you talk about, like in the courses and the training, it's also the network and the connections. And I have property manager partners who can run comps. Like I use everything everyone does, right? The AirDNA, the MatchAdvisor. Like I use a lot of data points, but then a real true, if it isn't an existing short-term rental, obviously historical revenue is the best data point. But if we don't have that, I would rather a property manager run actuals and give me those numbers. So I have that. I have some good property manager partners. I have some amazing design partners in this market that can do finish out, that double and triple income on properties that were already existing short-term rentals. So it is just having those resources as well.
Yeah, and really knowing what levers to pull. Like you just mentioned a lot of different levers that you can pull on all those different resources and professionals you can tap into. It's really knowing that to put all of them into play and put them all in place, right? And
Right.
I mean, you mentioned a handful of different data sources. That's what when we're underwriting property, we want to get the opinions of the management partners, the realtor partners, different software and data tools, and kind of combine it all together to paint an overall picture, and so that we can mitigate and predict as much as we can, mitigate as much risk as possible, predict our income potential as closely as possible, because nothing's ever perfect. And so the more data we can get, the more professionals we can get looking at it, and then kind of compile it all, gives us the best chance to succeed down the line.
Yeah, I agree.
Awesome. So as when you're like, you're mentioning like, I always get all the time, I'm just curious on your thoughts on this, because I always hear, hey, Sean, interest rates are really high. Prices are super high. Why wouldn't I want to wait right now on the market?
Oh my gosh, I have so many opinions on this.
Yeah, I knew you would. And so I figured I'd just like
ask that
it up.
question.
Yeah.
So my buyers, investors, short-term rental, primary residence, I don't care. My buyers across the board, I've been telling them for the past 12 months, however long, to me, this is an opportunity. Everybody's on the sidelines. Everyone's scared. There's not competition. I mean, Austin was crazy, whatever years, 2021, 22, whenever, where you couldn't get a property, you were overpaying, there was competition, people were making offers on things they hadn't seen, 100,000 over, all of that. You're not in that situation. There's things sitting days on market. Sellers are coming down on price. You're not competing on price. The interest rate doesn't scare me. Sellers are willing to buy down the rates. And I just think this is another thing that's an education that agents don't know, right? So if we can buy down your rate, a 3.21, a 2.1, and get your rate down 3% in the first year, I can get you down in the 4s and 5s still your first year. There's nothing scary about the rates to me. To me, it's an opportunity. So why don't you go buy right now where we can buy down your rate? The seller will do that. You can refi later, because if you wait like everyone else is waiting until rates come down, you're going to be competing with everyone else. This is your opportunity to shine. So that's my first answer. And my second answer is another space that I've moved into recently in the last 9 to 12 months is I focus a lot on creative financing. So I do a lot of seller financing, subject to financing. I have lots of buyers right now looking for, and actually the crossroads. So the short-term rental and the seller financing in this market, because I'm one of the few people doing both. I have literally hundreds of buyers looking in this market for the combination of those two things. So I go out and source these properties, or I work with sellers, or I work with agents and get terms where we can get you in a property for 10% down at a 5% rate or lower, or whatever the case may be. So for me, I mean, I want the rates to come down for buyers, right? It's a double-edged sword, but I also kind of like them staying high because I have opportunity in these two areas while they're still high. Yeah. Otherwise, everyone has opportunity. This way, we have this specialized opportunity, right?
Yeah, I 100% agree. And those two are amazing points. And most people don't realize, well, like we're seeing every single week inside of our Odyssey family we see 2 or 3 deals that are, some sort of seller financing, and they're usually at 5% or lower rates, and you're still putting, like you said, 10% down. We just had one at 5% down, 4% interest for 15 years on a balloon.
Yeah, that's amazing.
That amortized over 30 at a 15-year balloon. I mean, unbelievable terms. That was not really, that was like finding a needle in a haystack when things were just, when you could, put it on the market and 24 hours later you had 50 offers way over ask price. Nobody was willing to have those conversations, right? And there was really no reason, because you could go get a 4 or 5% mortgage, right? You can go, and now those things are out there, and a lot of these sellers, especially, I always say, in our world of short-term rentals, there's a lot of people that got into short-term rental world that have really good properties, really good income potential. They're set up beautifully for the most part. They've already spent a lot of the money on great furnishings. They look like model homes. We can go in and add a little bit of personality, and they're sitting there saying, holy crap, the ride's over, the game's over. I rode this wave as long as I could, and I'm losing money. And they don't know what to do to make money, so they put it for sale. They can't sell it, and now you can have these conversations saying, "Hey, listen, you got a really good mortgage. You don't have a lot of equity. I'll pay your equity with 5-10% down,
Yeah.
pays your equity off, pays the agents involved, and you carry that note for X amount of time." Those deals are out there, and they're really, really fun to take advantage of.
And the thing is, it's a win-win situation. We have the perfect
Yes.
scenario where they're in not even 4 and 5. There's people in at like 2 and 3% rates. So they
Yep.
can offer you a 5% rate. And the savvy investor, if it's an investor that it's an investment property, understands the interest rate arbitrage. So they're still going to cash flow without managing a property. So they win. We get in at a low rate with a low down payment. So we win. And that helps the underwriting because obviously this payment's a lot lower than a 7% payment or whatever the case. So literally everyone wins. So we're doing a lot of that in that space. And then back to the networking and knowing the market. Like every day I have conversations that introduces me to someone else and someone else who has properties or whatever the case may be. So I was just working with a seller who had a property to sell, and then he ended up telling me he has 30 short-term rentals, to your point, beautifully finished, very thoughtfully chosen. So like the different areas and the zoning and the development potential of the lot and whatever the case may be. So very thoughtful
Hmm.
properties that he is now, and not necessarily because they're not performing. I mean, and that's the case with a lot of people, but his situation is because they're too time consuming and he has small
Yep.
children. So
Yep.
he's going to get rid of all 30 of his properties and said, I'll just send you a list. I will do 15% down or less on all of these, and you can share them with your buyers. So
Yeah.
just having those connections and being able to make the connections of
Yeah.
this is what you're looking for, and I know someone who has it, is
It's
helpful all
huge,
day
and
long.
exactly, and that's why that's why you're as successful as you are. And it's why because you understand how to connect the dots. And you just said the key point is this is a win for everybody.
Right.
Inexperienced investors always assume if another investor is selling them a property, it's not a good investment. And that is so not true. There are so many investors who sell really, really good assets
Mhm.
just because of their life situation is different or changes, or they just want to move on. They want to move to
Right.
something different. Or, I mean, that happens all the time. And I always can tell when I'm talking to somebody that is an inexperienced investor, because they're always like, well, this investor's selling it, there must be a reason why. Well, there
Mhm.
is always a reason why they sell.
Right.
It's not always because the asset's a bad asset, or
Right.
it doesn't have the potential to make them money. We sell properties all the time that are making us money, and they're really good assets for somebody else. We're just moving up to something bigger and better typically.
Right.
Or in the case of the conversation you just had, he wants to get out of the asset class. He's like,
Mhm.
listen, I could do something else with the money from those 30 properties that is probably less time consuming for me. Right.
Correct.
And that's huge for somebody that's successful. There, he's trying to buy back his time.
Right. And he's a savvy investor. So he understands if I do this rather than selling them outright, I also create
Yeah.
interest income for the next however many years
Yep.
for all 30 of these properties. And however many millions more in income over that time period in interest income.
Yeah, exactly. Yeah, exactly. And so really, really good points. This conversation flew by for me. So I always try to keep these around that like 25-minute, half-hour mark, and I think you and I can talk a little bit more about this stuff for sure. And it's
Yeah.
fun for people to kind of be able to listen in on this type of a conversation, because it hopefully gets their wheels spinning. That's my goal with these types of conversations. Is there's something in these conversations that I want. It's going to get somebody that was sitting there on the sideline, hopefully, and say, maybe now is a better time. I
Mhm.
couldn't agree with you more. I do not like the times that we had as an investor, like that we saw post COVID for a couple of years, where you're competing with everything. There's
Yeah.
a lot of inexperience out there. There's a lot of money being flooded in, not only because I think a lot of people get burned in the long run like that, but also as an investor, it's really hard to navigate, because we're just, every time we turn around, we're having to pay more just to be in the conversation, and that's not always what you want to do as an investor.
No, and that's the money piece is part of it. And the second piece was everybody had to move so fast. You didn't have time to do your due diligence
Exactly.
and your underwriting and make an educated decision because you literally had to make a decision that day. It wasn't
Yeah.
dramatic, it was facts.
And that's why I said there's so many people that get burned in those situations, because if you feel like you're under the gun and you're under pressure and you have to move so fast, you make decisions that maybe aren't really good long-term decisions for you. Yeah, and that's what and we're seeing the effects of that now. There's people who really bought assets they shouldn't have bought, right? And
Right.
that were not the right fit. They weren't good short-term rentals for whatever reason, or any other asset class for that matter.
Look, I
You
bought in Savannah at the peak when everything was 100,000 over and 20, literally, because Savannah was hot like Austin, 20 offers on every house. So I ended up getting my property off market through an agent I had actually gotten set up with through Vodacy and Brolio. And we got it off market, and I'm certain I overpaid for it. It appraised, so it wasn't an issue. But and like I said, the appreciation in that zip code is amazing. But I feel like maybe I paid some of that on the front end. I'm just not, they're catching up with me. But it was what it was. That was my only option, and he needed somewhere to live. So
yeah, so you do it.
I mean, I
And
would
then,
rather be buying in this market than that market for
for
sure.
sure. I'm with you. And I think that that's who you see that's active right now, because the inexperience is most likely going to just sit on the sideline. A lot of people will, we hope, and I hope by having these conversations and putting these episodes out there and doing all the trainings that we put out, that it gets somebody to think, hey, now's a good opportunity, despite what you're reading and hearing and feeling, being able to find the opportunities in these markets is, I mean, they're pretty rewarding, and they're actually not that hard to find right now. I
No,
mean,
and
this is
that's
not
the
one of those
thing,
markets.
right? I mean, you have to get over the headlines and the
Yeah,
sensationalism and like get to the truth, but let everybody else believe that, because that creates
exactly.
opportunity for you. And whatever the quote is, if everybody's running that way, run the other way,
Yeah.
whatever that is about, that's when there's opportunity.
Yeah, absolutely. Well, Beth, this has been a really fun conversation. At the end of all the episodes, first, before we
Oh
get to
gosh.
I always ask you that, you put you on the spot, one piece of advice, right? So be thinking about it. But before that, I mean, our Vodacy family knows how to work with you, how to find you. What about people that are just listening in and they're saying, hey, man, I'm thinking about Texas Hill Country. I'm thinking about Austin. I'd love to work with Beth. How do where's the best place to point them for that?
Yeah, and I will tell you off the bat, I'm the person, I will help anybody. I don't care. I will answer your questions. Like, you're not obligated to work with me. I'm happy to run comps for people and answer questions. That's just who I am, to a fault almost. So like, I'm up at night answering questions at 11 at night. But social media, Beth Perkins Realtor, email Beth at beth-perkins.com.
Okay, perfect. And we'll put those of you that are listening, we always put those in the show notes as well. And so you can reach out to Beth. And then, like now you're on the spot, Beth. Like, if you go back and you're like, I mean, and maybe some of the things we've already talked about, but
Right.
what's a piece of advice that you wish you knew, you wish you could give your younger self, if you're talking
Yes.
to, some of your new clients or something, what would that be?
You hit the nail on the head. The thing that I get frustrated with the most, that I always say, is the things I know now at this age. If someone would have told me, and you don't know until you know, like you said earlier, in your 20s, like how to invest and how real estate can appreciate and create generational wealth, and be that through short-term rentals or even the creative financing piece of it now, the things I didn't know. So, you see people 20 years old now building these huge portfolios. So that's what I say. It's never too late, and it's never too early. Like, if you're young, there's people in their 20s doing this. Don't be scared. If you're in your 50s and you haven't done it, that's me. Start now. It's better than not starting at all.
Yeah, I love it. I love it. And most people say, I wish I would have started earlier, but I
Yeah.
love the add on to that, to say it's not too late,
Yeah.
start, right? It's okay if you've never done it, but now I'm just going to ask you this really quickly on your opinion on, you mentioned how generational wealth can be built with appreciating assets, right?
Right.
I feel like one of the big, kind of shiny objects that a lot of people talk about in the short-term rental space, online and on social media and everything else, is everybody's chasing a certain return or a cash flow. And I always tell people, that's not really where your wealth is built. Your wealth is
Right.
built by buying quality assets in quality areas over a 5 or 10-year time horizon. And that's where you build real wealth, because of the appreciating asset.
Well, and that's very relevant in this market. So I'm glad you brought it up, because Austin's hard. When people are looking in multiple markets, Austin is hard. So our cash flow, it's a struggle, because we have high property taxes, we have high acquisition costs. So people will underwrite things and be shocked. Oh, it's not cash flowing or it's breaking even, whatever. Like if I can find something that can cash flow, which I can find, but it's not every property here, right? So I think markets are different. There's markets where you get a lot of cash flow and there's markets where you get a lot of appreciation. I think Austin will continue to appreciate, and that's more of the focus. So if you can find something that will cash flow, and absolutely, we just had a Beths client buy something on South Congress 78704, and they're killing it. If you do it well, find the right property, and you execute correctly, you're going to cash flow. But I don't think this market, that's your focus. I think it's more appreciation. Austin proper, right? Like outside of Austin might be a different conversation, but Austin proper, I think it's more about appreciation.
Yeah. And I always, I mean, and I've seen it over, I've been doing this full time for 24 years. And I show examples of this on workshops all the time that, you can go chase a cash flow that you're getting 15, 20, 25%, cash on cash returns, which is great. And I can go buy and break even property and in a quality market that appreciates better than your 25% cash flow property. And over a 3, 5, 10-year time horizon, I'm way further ahead. Right. Yeah. And so I agree that it's something that's overlooked, especially like you said, right now in these markets where prices are high, interest rates are high, those two things affect your cash flow, right? That's going to affect your cash flow, but doesn't affect your ability to go buy a quality asset that's continued to go up.
That's right.
So awesome.
That's right. Great.
Awesome. Point. Yeah. Well, Beth, I know that you're on the road. I know that we had to navigate a couple places that you could go that we could sit down and actually have this conversation. So I know how valuable your time is. I know you got to get back to things. So I appreciate you joining us. Those of you that are listening, we also know how valuable your time is. And I always appreciate you joining and listening to these conversations, be a part of our world. You guys know that I don't run ads on these episodes. The only way that we share or that we grow is for you guys to share it and like it, review it, leave us a comment. Those things do help us. They help us spread the word, help other people walk into this game with their eyes wide open, continue to have these conversations. And that's the first favor I always ask you is to share the show, like it, review it if you have more than 30 seconds. And the second favor, and kind of more of a request at the end of every episode, is to pick that one thing you can do today to start building that life you don't want to take a vacation from. Cheers, my friends. All right, Beth, that was awesome.
Yay.
Thanks for joining us on this episode of the Vacation Rental Revolution podcast. Share this with other people you think need to hear about it. And don't forget to subscribe and leave us a review. Hey Grace, is there a website?
Yes! For more amazing content and expert advice, visit Bodyssey.com.
Thanks for listening, and we'll see you on the next episode.